Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the very first time, a huge welcome to our community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this episode. Very excited to be investing. How could we not be excited when markets all around the world are hitting all-time highs?
It is very exciting. And last week we spoke about gold hitting all-time highs.
Yeah. We'll get into that.
Continues.
We'll touch on some of the records that are being set as we hit the news this morning. But that's not all we're going to hit in another big episode of Equity Mates. Super September continues, the month where we are encouraging all Australians to engage with their superannuation. We'll be unpacking simple tips that everyone can do to maximize the only free kick in finance.
Yes.
And then Simon is joining us in the studio for a returning segment, X Marks the Stock, where we look at some of the most hyped stocks on social media.
News and markets.
Headlines we're covering this morning. Google has lost its antitrust case but seems to have got off lightly, and the biggest geopolitical story of our time is playing out.
Yeah.
Ren, let's start with Google though, because it is good news for Alphabet shareholders.
Well, let's take a step back, because we started this episode by saying that things are hitting all-time highs. And for people who aren't following the indexes that closely, last week, the ASX 200, Australia's share market, broke the 9,000 level for the first time. Now, don't worry so much about what the numbers mean. What you need to worry about is that the Australian share market hit an all-time high. So if you're not investing, this is a reminder that you should be. But not to be outdone, the US market has also hit an all-time high. And a big reason why it is hitting all-time highs is because tech companies are doing pretty well.
Yeah.
And a tech company that is having a real moment, as you said, is Alphabet.
Yeah, so the context here is that a federal judge in the company's antitrust case ruled that it would not have to sell its web browser Chrome.
Yeah.
So essentially what happened is the US government did sue Google for anti-competition.
Yep.
And they have won. However, the good news is they don't have to sell.
Yeah. So a federal court ruled that Google was maintaining an illegal monopoly in their search business. And so the government won. And then the question was, all right, well, now we go to a sentencing hearing or a punishment hearing or whatever you call it to figure out what Google would have to do. And the government were asking for a forced divestment. They were asking for the court to force Google to sell its Chrome web browser. But the court has let Google off pretty lightly. They said they don't have to sell Chrome. They also said they can continue making big payments to other tech platforms, because one of the things at issue was Google paying Apple billions of dollars a year to make Chrome the default. To make Google search the default search on Safari on the iPhone.
Yeah.
And the courts have said that's all okay. Basically, they've said that Google search is essentially like a regulated monopoly now. It needs to share data. It's like a utility.
Yeah.
It needs to share data with other participants in the market.
Yeah.
But it can keep basically operating as a
And the
monopoly.
data that they can share, or that they've been told to share, it has very little implication. Like there's no secret source in it or anything like that.
No, the secret sauce for Google is give a really good search result and then put ads all around it.
Yeah,
And
so
they
the
can continue to do that.
data sharing is nothing.
Yeah,
really.
so Alphabet shares are up 9% on the news, and they've continued to tick up in the days since.
Yeah.
Apple was also up on the news. So really just more good news for big tech.
Yeah. I mean, it's just like, we've spoken about this on the show before, but this whole anti-competitive breaking up big monopolies, it's like the government, there's never been a case in recent history, I don't think, where they've had success at this.
Well, how recent is the history?
Like,
I mean,
big tech recent.
No, yeah.
Big tech recent.
AT&T, the Bell monopoly, and then obviously like Standard Oil and stuff back in the day.
Yeah, no, that's not
recent.
No.
In our lifetime.
Yeah.
So yeah, look, markets hitting all-time highs. Gold, you said, hit all-time highs. Silver hit an all-time high. Oh, sorry, not an all-time high, a 15, 14-year high. Markets are...
Tell you what's not.
Bitcoin.
Yeah.
But look, just a reminder to get invested, to stay invested, to dollar cost average, because no one knows where markets are going. But over the long term, they trend upwards. But Bryce, you flagged a second story we want to talk about today. The most important geopolitical story of our time is playing out.
It is.
And what it isn't is the French government potentially defaulting on its debt. I've tried to sneak that in for 2 episodes in a row.
It's just a classic, like, it's not going to happen. Let's not talk about it.
And both times you said we're not doing France.
It's just not going to happen.
So I just want it on the record that if it happens...
It's not going to.
No, you're right. It won't happen. But they are talking about an IMF bailout.
You're sneaking it in. Let's just focus on what's here and now. And that is the relationship between China and India.
Yes. So China and India, the 2 most populous countries in the world, together they have about a third of the world's population. The reconnecting of these 2 countries, I think, is worth paying attention to, because it will have huge geopolitical implications. So to take a step back, their relationship was absolutely broken. They literally had border skirmishes in 2020 in the Galwan Valley. If people remember, they weren't shooting at each other, but Indian and Chinese soldiers were beating each other up with baseball bats.
Yeah, it was pretty rough.
Pretty rogue.
Yeah.
But the relationship completely broke down.
Yeah.
China started selling a whole bunch of, they continued to sell a whole bunch of weapons to Pakistan.
Yeah.
Obviously, India and Pakistan don't see eye to eye. Domestic flights between China and India were cancelled. There hasn't been a domestic flight since 2020. And then the US worked really hard to bring India into their contained China orbit. And, the Quad was launched in 2017, but relations between Japan, South Korea, Australia and India were really strengthened over the past sort of 8 years. Like that was the geopolitical chessboard as it stood. And that is all changing in the past 6 months.
Trump.
And it's going to be worth paying attention to as Australians who sit in our little corner of the Asia Pacific. So Trump first pissed off the Indians by claiming he brokered peace between India and Pakistan after their war earlier this year. The Pakistanis nominated Trump for a Nobel Peace Prize. They were happy to go along with it. But apparently Trump has been calling Modi and demanding that he nominates him for a Nobel Peace Prize. And the Indians hate it that Trump is claiming credit for it. And then after months of negotiating that 25% tariff rate, Trump then just on a whim decides to double their tariff rate because they continue buying Russian oil. And that's pissed off the Indians even more. And that has brought India and China closer together. Yeah. So Modi rocks up to China's military parade 80 years since World War II. Modi and Xi have a one-on-one meeting. First one-on-one meeting since 2018. Between 2014 and 2018, they had 5, and then relations went sour and they hadn't met. But Trump has driven them back into each other's arms. And just to highlight how much things are changing, they've agreed to resume domestic flights between the 2 countries.
Crazy.
And it's like they're calling it the elephant and the tiger coming together.
Oh, no.
And it's a third of the world's population and a huge amount of the world's GDP. And it's going to be important if this trend continues.
Yeah, well, I mean, Xi's on a bit of a tear at the moment with his sort of forcing the cracks between a lot of the... taking advantage of the disruption that Trump is causing globally.
Yeah.
And he's been making headlines a lot recently. It's been pretty interesting. Well, there you go.
Well, and Dan Andrews.
Dan Andrews rocking up. What the hell? What the hell?
Anyway, Dan Andrews is not the most important geopolitical story of our time.
This stuff sort of plays out while Trump's in power, and assume that the Democrats get in within the next sort of 3.5 years or whatever. Like, what happens in this situation? Does China-India relationship continue? Is there another whole lot of work that needs to be done to, put a wedge between the 2 again? Do you know what I mean? Like,
I think if your foreign policy will change based on who's in charge, then all of a sudden you're seen as a very unreliable partner. Yeah, I mean, we saw that with the Trans-Pacific Partnership collapsing. Then we saw that of the US pulling out of the Paris Climate Accords. They were seen as unreliable, and then Biden rejoined, and then they pulled out again. Anyway,
crazy.
Look, the investing implications for this come down the line.
Yeah.
But if all of a sudden China and India open up, have more access to each other's markets, then all of a sudden you'd be thinking about some of the consumer phase. Well, just some of the businesses in those 2 countries.
Yeah.
Getting access to markets of more than 1 billion people and what that might mean.
We should get Magunthan on from India Avenue to tell us what he's thinking about it all. Anyway.
For people who don't get that reference, on our sister show, Basis Points, we interviewed a fund manager who's focused on investing in India, Mugundan.
Fascinating.
Fascinating interview, so you can go and listen to that then.
Ren, it is the 8th of September, so it is time to check in on Super September, the month where we are ensuring that all Australians, all of the Equity Mates community are engaging with their superannuation.
Yeah, it is a sleeping giant that too many Australians are not engaging with. We call it the only free kick in finance because of the tax benefits you get and because it enforces some discipline, some long-term investing, some dollar cost averaging. But I think Australians sleep on just how big the superannuation system is. It's now almost $4 trillion. Wow. To put that in perspective, that's larger than the Australian stock market. That's more than double the size of the Australian economy.
Wow.
It is a beast. It is the envy of the world, and too many Australians don't take advantage of it.
Well, helping us engage Australians through Super September is our partner, Vanguard Super.
Vanguard Super's life cycle option is designed to take the stress out of superannuation. It automatically adjusts your investment mix as you age, focusing on growth while you're younger and gradually reducing risk as you approach retirement, all without you lifting a finger.
So check out Vanguard Super at vanguard.com.au/super.
Products issued by Vanguard Super Pty Ltd. Consider the PDS and MD at vanguard.com.au/super and decide if it's right for you.
So last week we spoke about two things. Firstly, logging in and checking your superannuation account because the numbers of Australians who aren't doing that is alarming. And then secondly, once you have done that, check that you don't have multiple superannuation accounts. And if you do, you can simply combine them.
That's right, Bryce. Too many Australians haven't logged into their super account in the past 12 months. Literally just username and password, check that everything's all going okay. But also 1 in 5 Australians have multiple super accounts, which means they're paying multiple sets of fees, which means they're probably paying for multiple sets of insurances, and they are literally giving money away to the super funds and the insurance companies for no reason. And so that was what we said last week. This week, we're coming to you with another easy, actionable tip to make the most of your superannuation, and that is check your employer contributions. Because the stats are pretty worrying. 1 in 4 Australian workers miss out on legally required superannuation payments each year.
Yeah, that is not good.
1 in 4.
Yeah. Now, that's not the employee's
There's
fault.
8 people who work at Equity Mates. That means 2 people at Equity Mates.
I can guarantee no one at Equity Mates is missing their super. Now, you might be sitting there thinking it's your fault. It's not your fault, but you should be checking.
No, it's clearly the employer's fault.
You should be checking to make sure that your employer is paying you. Because, as we said, as of the 1st of July 2025, it is a legal requirement that it is now 12% super contributions by your employer. So make sure you're checking. The good news is it is very, very easy to check that your employer is actually paying you that 12%. All you need to do, well, there's 2 ways really. A, the source of truth is the ATO website or your MyGov account. Secondly, it should be appearing on your pay slip or however you're getting paid, and the information provided to you by your employer should also outline your super contribution that has been made. So very, very simple, but I can check it in my ATO Ren. It will just show you by date when your employer makes the contribution and how much.
Yeah. Now, for some people, if they're checking MyGov and it doesn't align with the pay that they're getting, currently employers can still pay super up to quarterly. And so you might not be getting paid super every time you get paid your normal salary. That is changing. So from the 1st of July 2026, payday super legislation is coming in that will require super to be paid at the same time as your wages or your salary. But for now, up until that time, check your pay slip because that should have the details. And then, you can check MyGov quarterly, but that is changing. I think it's important to stress that every worker is entitled to superannuation. Just because you're like a casual worker working a part-time job or whatever, you should still be getting paid super. And so make sure you're getting paid because, as we said, it's 1 in 4 Australian workers are missing out.
Now, Ren, there are nuances to it. Of course, if you're a contractor or you're self-employed, you're not going to be paid in the same way. You need to manage that yourself.
Yes. Okay. So to be clear, any Australian employee
Yes.
Yeah. Because like not contractors or gig economy or self-employed, but yeah.
Self-employed, you need to manage your super yourself.
Yeah. Any Australian employed worker.
Yes.
The unpaid super bill for 2023, $5.7 billion.
Yeah, it's wild. Yeah. So pay attention. Check your employer contributions. Make sure you're getting paid.
Yeah, as
Pretty
we
simple.
said, throughout the month of September, we're going to be sharing super simple tips that anyone can do to make sure you are optimizing your super to make the most of the only free kick in Australian finance.
Super September is brought to you by our partner Vanguard Super. Check out Vanguard Super at vanguard.com.au/super. Welcome back to Equity Mates. Today we are looking at two intriguing plays in the crypto and data center space in our segment X Marks the Stock. Stocks that are buzzing on X. And we are here today with Simon, our resident expert, I should say.
I'll take
Our resident social media junkie.
Ex-addict.
Nice. Ex-addict, Mr. Beta, whatever. Love stocks. Welcome.
Yeah, great to be here.
All right. If you've just joined us, the name of today's game is pretty simple. There's plenty of stocks buzzing in the what do they call it? FinTwit?
Finex.
Finex.
I'll still call it Twitter.
Finex community. And so we're going to talk about two today. Is that right?
Yes, we've got two to go through here today. IREN
Yep.
and Bitmine.
Okay.
Well, let's start with IREN because it is a good old Australian play taking on the world, formerly known as Iris Energy. Tell us about it.
Yeah, so Aussie founded and led two brothers, Daniel and Will Roberts, actually ex-Macquarie executives. Started life as a Bitcoin miner. Still doing that, still a big chunk of their business. They run all their data centers off renewable energy, which is their kind of uniqueness. But they've done a massive pivot recently into AI. What they're doing now is they're renting their data center computing power for AI workloads. They've got facilities in the US, Canada, and Oz. Since they've pivoted, the stock price is actually up 300% in the last 12 months. Last week, they published some really strong quarterly results. Revenue was up 200%. $1 billion of that annualized revenue comes from Bitcoin mining, but now they're getting $250 million a year just for renting out the AI cloud business and stuff they're doing there.
So, I mean, you can see where the hype is coming from. It's associated with Bitcoin.
Yeah.
It's associated with AI.
Yeah.
It's got massive revenue growth.
It's a masterful play in putting your company right in the middle of the hype.
Yeah.
Right in the middle,
Right
the
in the middle
biggest
of
hype
it.
trains.
You're going to get the two biggest hype trains.
Exactly, yeah.
So it's been a pretty wild ride. I remember when, and you probably do as well, Ren, when this listed in 2022 at like 65 cents.
Well, someone who's been a long-time supporter of us here at Equity Mates, who's come on the show a number of times, Charlie Viola, was an investor in them pre-listing.
Yeah,
So I remember hearing about it from him at the time.
Yeah.
How much money did we leave on the table not
I know.
buying?
Well, wild ride listed at 65 cents. Within the space of a year, it shot up to $17. Yeah. Then a year later, it was back down at $1.25.
Oh.
And then over the past 2 years, it is up 1,990%.
So it 20 bagged and then collapsed and then 10 bagged again.
Yeah.
What a ride.
So what's its share price today?
26 bucks.
$26.
26. Oh my God.
Yeah, it's crazy. So yeah, I guess on X, this is one. Ren's a fan of these. You see these lists.
Oh yeah. 10 stocks to 10 bag of potential.
Yeah.
Potential 10x in 5 years.
Don't say I'm a fan of them. I'm like, you love them as well.
I mean, you're a fan at laughing at me looking at them. I think.
I like them.
I was saying we should just take small stakes in all of them.
Well, I mean, honestly, they've done so well.
Yeah.
And like maybe you say it's a frothy bull market, but like, Duolingo, anyway.
This one,
Yeah,
List goes
so
on.
at the Tech Investor, he's got it in there, number 7 on his potential 10x in 5 years. There's another one, The Analyst. He's got it as number 2 potential 10x in 5 years.
In 5 years.
Yeah.
Here's a
Interesting.
content idea. Should we do the aggregation play here? We aggregated all the 10x lists so you don't have to read them.
We could do that.
That's pretty good. Yeah, anyway, go on.
I like that.
We just create our own.
So yeah, I mean, we've talked about it. The hype is really Bitcoin and AI and the pivot they've made. A guy called Andrew Wilkinson, people may have heard of. He's a Canadian entrepreneur investor. He's worth about $500 million. He actually tweeted back in Feb, I think I found a Picasso at a garage sale talking about IREN. It's up 125% since then, and he doubled down this week saying, I actually think it's still cheap. His argument is basically the US capacity for energy and compute is highly constrained. IREN's a reputable company, publicly traded. They've got massive data centers. They've actually got a couple in Texas mid-build, which are now going to pivot from Bitcoin mining to actually build them for AI training and inference. And once completed, they reckon it's going to be an extra $2 billion in new cash flow.
Wow. One thing that I saw when I was looking into it as well is that a lot of institutions who have to invest with ESG mandates are pouring money into it to try and get into the data center play because they fall under renewable energy.
Yeah.
And so you've got all this institutional money coming in that wouldn't otherwise be able to go into other sort of similar projects.
Yeah. So I think it's compelling. I think obviously it's run a lot, and I'm sure like the valuation, if you just looked at it today, is quite stretched. I think the really interesting thing, if you strip out all the AI stuff, because there's an argument that like the AI stuff, at some point the hype is going to go ahead of where AI is, and maybe we're not there yet, maybe we are. But at its core, it's like there's the renewable energy problem is that we can generate heaps of renewable when the wind is blowing and the sun is shining, and we don't have a lot of good storage options. And it's the same in the US. Like storage is the challenge. Storage is expensive. Grid scale batteries are difficult to build. And so having offtake solutions for excess energy so you don't push the energy price into negatives and stuff like we've sort of seen every now and then is great. And so like Bitcoin mining with excess renewable energy is like a great solution for excess energy. I don't know enough about the AI part of this whole business, but like you can see how that makes sense. It's like it's a different way of converting excess energy into something that's money.
Yeah. And so I'm a bit nervous about buying it because it's run so hard. So there's a bonus stock here. It's called CIFR. They're also a Bitcoin miner, and people are saying now they're going to follow the IREN playbook, and it still could be quite early with those. So another one to look at.
Okay.
So let's move to the second one. But my closing thought on this one is it's another example. This is a high horse that Bryce and I have been on for a little while. An Aussie company that didn't list in Australia.
Yeah.
Where was the ASX with their business development team trying to get the Iris guys back in the day to say, at least dual list here and help the ASX out, support Australia. But anyway, good on them. Love to see Aussies taking on the world.
Unbelievable. All right, number 2. We've got Bitmine. Ticker is BMNR, listed over in the States. What's the deal?
So also started life as a Bitcoin miner, had a hard pivot this year. They've reinvented themselves as an Ethereum Treasury vehicle, which in short is basically they raise capital and debt, the intention of just buying as much Ethereum as they can on their balance sheet. Their ambition is to own 5% of all the Ethereum supply in circulation.
So we've seen the story play out in the Bitcoin space with these treasury companies, MicroStrategy probably being the leader.
Saylor.
Yeah, Michael Saylor in the leader in that space where they effectively issue stock or raise debt and buy Bitcoin.
Yes.
And then share price generally goes pretty crazy. But these guys are going after Ethereum.
Yeah.
Is there a particular reason?
Because everyone else is doing Bitcoin, so
they just want Ethereum.
Yeah. So the guy who's the chairman, this guy called Tom Lee, has been brought in. He was actually formerly a global chief strategist at JP Morgan. He's quite famous of making some long-term calls on Bitcoin in the past and other stuff that he's predicted. He's now chairman of the board. He's basically saying that stable coins are going to be the ChatGPT of crypto, and like Ethereum is going to be the infrastructure needed to power all these stable coins as traditional finance move across to the blockchain. So he's basically calling it, he says Ethereum's going to be a massive macro trend for the next 5-10 years. So they want to own as much of that blockchain as possible. That's the short thesis. Obviously it gets quite complex beyond that.
Nice. How much does he have at the moment?
8 billion, I believe, at the moment, which I think is edging towards about 2%. So they've got there bloody quick, actually.
Yeah, it feels like a pretty low target.
I think I heard something saying they've got there 12 times quicker than MicroStrategy did get to 2%, because MicroStrategy is now at 3% of Bitcoin.
I don't think that's a fair comparison, though. It's like Michael Saylor walked so all these guys could run. Like he established the strategy. He convinced investors that it was worthwhile. Of course, everyone that follows in his footsteps does it quicker because like he's done the sales pitch
Should
already.
we do it?
But let's do it with a real shitty cryptocurrency.
Yeah, Fartcoin.
We'll make a Fartcoin treasury. So, like, I don't know if there's much we need to dwell on here, unless there's more that you want to talk about. But, like, of course, we know the hype is there on X because people love crypto on X, and the treasury companies are having a big run at the moment. Is there anything else we need to know hype-wise?
I probably just want to just give this guy a call out just because it's one of the best X handles I've ever seen. At Sam Altcoin. He's been tweeting about it. He's basically implying like Wall Street and AI are going to choose Ethereum, biggest macro trend for the next 5-10 years, 60K Ethereum in 5 years. Tom Lee himself.
Yeah, but I could tweet that. 100K
Yeah,
Ethereum.
I just want to call out that handle. Tom Lee himself, he's got about 500,000 followers. He's been promoting it everywhere. He's been going on some pretty big pods like Raoul Pal and Maro Nafal. Shout out to this guy called Amit Investing as well.
Shout out.
I want to get him on Equity Mates.
Okay.
So I'm trying to get
Alright.
in contact with the media team there. I
Nice.
think it'd be a great guest, and then we can maybe unpack this a bit more.
Love it. Well, let's close out with the ride that investors have been on. So in 27th of June, the stock was $4.26. I'm guessing that's when they announced this strategy because then it rocketed 3,000% in 2 days.
Far
Then 2 days later, it had dropped 70%, and now it's flatlined. So
Imagine if you knew that was going to happen, if you knew that announcement was coming, and like,
you're at 3,000%,
I mean, like, yeah, you can dwell on the up 3,000%, or you can
or
dwell on
you've
the down
lost,
70%.
or you've lost,
yeah.
76%.
Yeah, because what happens is, and like this is the sad thing with a lot of these hype stocks, is like insiders and people who are doing this 24/7 get on early and they see it early and they see the announcement, and then retail investors hear it days later, and they're the ones that then become the exit liquidity and write it down 70%.
Well, Trump Jr. overnight became a billionaire in his own right, I think, 3.6 billion, because another one of his crypto companies listed and shot up a ridiculous amount.
What, after World Liberty Financial?
Yeah, he's listed another one called, it's just a J up that they keep doing this.
I was actually doing the math. This is completely unrelated, but you know, so 2017 when Trump first gets elected, there was questions like, was he actually a billionaire? Do you remember that? And it's like, he was definitely worth hundreds of millions of dollars, but like, was he a billionaire was kind of the question. By the time he gets elected the second time, 2024, there was no doubt he was a billionaire. Sorry, yeah, 2024? Yeah. There was no doubt he was a billionaire, but it was like 1 billion.
Yeah.
In the 6 months since, they made about 6 billion from World Liberty Financial, and I think they've made 3 billion from something else. I think the Trump and Melania coins or something like that. So those two crypto things alone have got them to 10x their wealth in 6 months.
Well, the new company is called American Bitcoin, and he has a stake overnight now worth 1.5 bill.
Yeah, it's just nuts. They're also, did you see that Donald Trump Jr. took that Amazon for Guns company public?
No.
It's like, that's what America needs, like overnight delivery of guns.
all right, guys, so you've heard a bit about the companies and the hype. If you had to pick one,
Well, Bryce is backing that Amazon for Guns company.
No. It's pretty clear for me, I think. It's IREN.
Yeah, same.
Yeah. In the short term. Could be wrong long term.
until
but short
Tom Lee
term.
comes on the pod and convinces you otherwise.
Yeah.
Like this might piss off some of our crypto listeners, but it's like, for me, Iris, I actually can see having like a real business underlying the hype, which is a problem to be solved, which I was speaking about earlier. Excess renewable generation. What do we do with it? We can't store it. We don't want to push the grid into negative energy prices. This is a way to monetize it. Great. Solves a problem. Bitcoin treasury, Ethereum treasury companies don't solve a problem in my view.
Yeah.
Because you can just buy Bitcoin and Ethereum. They're just a way to get a super leveraged play on a company and allow people that have investment mandates to only invest in stocks to invest in these assets at a high risk speculative way. It's not solving a problem. It's not making the world better. Anyway, that's my rant.
But could be big returns.
Could be a big return.
What about you?
Look, I agree with everything you said, but I've got a bit of a soft spot for Tom Lee, so I'll back him
knew
here. He
you'd say that.
needs a vote, and let's get him on the pod.
You're just saying that to get him on the pod.
If you have a stock that you're seeing buzzing on X and you would like us to have a look at it, or you would like our X addict over here to get his eyes across it, send it in. But otherwise, gents, great to chat. That brings us to the end of the episode. We'll pick it up next week.
Sounds
Nice
good.
one.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.